Hello, Mike Petry, president and owner of M&M Mortgage here in Roseville, Minnesota. I've been actually asked to put together a video for this week's educational moment on retirement and just the different type of refinances that can help you into retirement. So I'm going to go through them relatively briefly here. If you have any questions, make sure just to reach out to us on the M&M Facebook page, or our website, whatever works. But basically, there's four different types of refinances that can actually help you into retirement. Number one's a pretty simple one: just refinance to a shorter term. So if you have 30 years left on your mortgage, or 25 or 20 or whatever it may be, just refinancing to a shorter term, will pay off that mortgage obviously earlier. And one of the main benefits of refinancing to a shorter term is generally shorter term mortgages have lower interest rates. So not only are you going to pay it off sooner, but you're going to pay less interest on a yearly basis as well. So that is the number one and the most obvious way a refinance, could actually help you into retirement. Number two is refinancing just to a lower rate and lower payments. So if you have a high interest rate, or if you have mortgage insurance on your current loan, just trying to refinance, to either, another 30-year mortgage, or even if you have 27 years left, you can refinance generally specifically to a 27-year mortgage. And if you lower the rate, get rid of mortgage insurance, or even decrease mortgage insurance, you'll just save money monthly. And if it saves you, for example, $200, $300 per month, you can take that, monthly savings or yearly savings and invest it in the market, at the end of the day. So just, saved money, can be money that can be put into retirement, So number three kind of hits on that as well: refinance to, pay off the mortgage or mortgages and consolidate bills to get lower payments. So if you have other, debts that are out there, car loans, student loans, credit cards, anything else that has higher interest rates, generally the mortgage rates are some of the lowest rates in the world that you can borrow at, because your house is the security. If you have higher interest rate debt, you can pay off that debt and it can save you monthly. Hence, if it saves you a truckload monthly, you can use that money and invest it in the market and build up that retirement account. And then number four is a little bit more speculative, but it's possible. Refinance for cash out to invest in the market. So let's say you have a $100,000 mortgage or whatever that amount is, and you have a house worth $400,000. You could do a cash out refinance to pay off the mortgage and then get a bunch of cash in hand. Take that cash in hand and invest it in the market. Now that, is relatively, it's a speculative move. But if, for example, if you can borrow in the higher twos on an interest rate, or threes, and you can get a rate of return of 5 to 6%, at the end of the day, you would win in that scenario. If you can borrow at lower interest rates and invest and get a rate of returns that are higher interest rates, you're always going to win. So there's a little speculation on the market there, but no matter what, it is an option that you could have, So there's four very simple ways that a refinance could actually, help you into retirement. Once again, just go onto our Facebook page or go onto our website and feel free to inquire, if you want to look into, any of these types of refinances, and we would love to help you. Have a great day. Bye-bye.